Welcome to The Explainer on the Baeeia Reboot. We're diving into a truly fascinating source document today, one that lays out a completely unique approach to international real estate. We're going to tackle this Q&A style, asking the biggest questions about the investment mechanics, the long-term vision, and the core philosophy driving the entire project. So, let's jump right in. Now, what if you could own a slice of a Brazilian eco-resort, generate some real passive income, and, get this, never have to deal with a foreign tax agency? I mean, that is the ultimate dream for anyone looking at international real estate, right? You want the gorgeous location, you absolutely want the returns, but the typical bureaucratic roadblocks, yeah, those can be a nightmare. The source material we're unpacking today presents a model designed to deliver high-yield international assets without those traditional administrative headaches. It sounds kind of too good to be true, but as we break down the structure, you'll see exactly how they've engineered it.
Okay, let's dive into this. Part 1, the what and how, the fractional model.
So our first major question, how does this flexible 1-to-5 share fractional model actually work, and what are the benefits for you? Well, the Bahia Reboot values a total premium chalet at $60,000, but they allow you to purchase between 1 and 5 shares of that specific unit. This flexibility significantly lowers the barrier to entry while still giving you that critical deeded equity.
Let's look at the math here, because it's pretty compelling. The rule of thumb is that fewer investors per unit means greater individual rewards. For instance, if you come in at a 1/5 share, your investment is $12,000. That yields you 10 weeks of annual personal usage and an estimated $530 in monthly passive income. But if you maximize to a 1/3 share, meaning only 3 investors are sharing the unit, that requires a $20,000 investment. Mathematically, that bumps you up to 17 weeks of personal usage and a higher projected monthly passive income of around $890. Which naturally leads to a massive question that almost every foreign investor worries about. Do I need a Brazilian tax ID, known as a CPF, to invest? If you know anything about buying property in Brazil, you know this usually involves a mountain of red tape.
Well, you can breathe a sigh of relief. The answer is no, because you are purchasing a share from the managing entity rather than buying the land directly. You completely bypass the strict Brazilian CPF requirement. It is a brilliant workaround that totally streamlines the process for Americans and international investors.
Moving right along. Part 2, the vision and growth, strategic development.
Now we need to look at the long game. What role does the Phase 4 Convention Center play in the retreat's long-term growth? Let me tell you, this isn't just an extra building. It's the financial backbone of the retreat's future.
If we look at the timeline, Phase 4 is scheduled for the 36 to 60-month mark. This is the destination stage of the master plan. It requires a $480,000 capital expenditure, but here is the kicker. It is funded entirely by the self-sustaining revenue of the earlier phases.
And here is a look at that Phase 4 Convention Center. Its strategic purpose is absolutely crucial. It unlocks what they call a transformational revenue layer. By driving year-round demand, this stunning creekside venue effectively eliminates the seasonal dips in occupancy that usually just crush hospitality projects.
So what kind of high-margin demand will the convention center attract? It specifically targets corporate retreats for executive offsites and team wellness immersions, wellness events for year-round workshops, and weddings and celebrations that want to utilize that incredible tropical forest backdrop.
Okay, let's switch gears and talk numbers. How exactly is the risk-adjusted return, or RAR, calculated in their internal Rethinking ROI comparative model?
The math is actually pretty straightforward once you break it down. You take the projected 10-year profit of a standard $350,000 investment and divide it by an assigned risk score from 1 to 5. So the Bahia Reboot Chalet's project a $1.82 million profit. Divide that by a risk score of 4 and you get an RAR of $455K. Now wait a second. Some people look at that and say, wait, what's the actual loss if someone ends up with an RAR of $455K? Actually, scratch that. It's not a loss at all. It is a massive gain. Because it's just the profit divided by the risk score, an RAR of $455K mathematically translates to $1,820,000 in pure projected profit above your initial investment. That is a huge deal.
This brings up a really crucial wealth strategy question. Does investing in both the Bahia Reboot chalets and the surrounding Coastal Horizons land constitute a fully diversified portfolio? The honest answer is no. While combining the chalets for high cash flow and the land for long-term appreciation creates a powerhouse international real estate engine, it still concentrates your capital in a single geographic region. A truly diversified wealth strategy relies on three pillars: the chalets, the land, and a diversified ETF or index fund portfolio to provide baseline stability and high liquidity outside of Brazil.
All right, part 3, the why, purposeful living philosophy. Let's move from the financial numbers to the lifestyle ROI.
We have to ask, what are the 5 pathways that anchor this purposeful global living roadmap?
And this brilliantly illustrates how interconnected the whole journey is. These pathways are designed to guide individuals toward real, intentional living. Discover, finding purpose in global possibility. Learn, building resilience, sustainability, and self-reliance. Connect, fostering community and human flourishing. Explore, action in global living and stewardship. And finally, create, building a thriving future together.
So if we zoom in from that macro community philosophy down to you, the individual, what are the 3 foundational pillars of a personal reboot?
The Baeeia Reboot philosophy believes a successful personal reset is built on aligning 3 core things. First, nourishment, focusing on what and how you eat, heavily leaning into fresh, living foods. Second, environment, optimizing your physical surroundings and your kitchen to actually support healthy choices. And third, rhythm, aligning your sleep, your movement, and your daily flow with natural cycles.
But how do you actually build this philosophy into a physical space? How does the chalet architecture integrate with this massive tropical environment?
You can see it right here. They use these amazing biophilic, eco-luxury design principles built for tropical resilience. Check out the expansive panoramic glass facades. They literally seamlessly connect your indoor living space with the forest canopy outside. Plus, they use elevated foundations for critical moisture protection in the jungle.
And they aren't skimping on materials either. These units are built with premium native hardwoods. You've got macaranduba for structural strength, angelum wood for those warm interior finishes, and guaja raw wood for the intricate decorative details. Pair that with multi-sloped roofs for advanced rainwater management, and you have an asset truly built to last in a demanding ecosystem.
As we wrap up this Q&A explainer, the source material leaves us with one final, incredibly profound question to ponder. By investing in a regenerative ecosystem, what kind of legacy do you want to build for future generations? It really challenges us to think about how wealth generation can go hand in hand with global stewardship. Thank you so much for joining me as we unpack the Baeeia Reboot. See you on the next one.